Here, put it here. All right, everybody. Welcome to another show about crypto, and we have a very cool guest on today, Nicholas Merten. How's it going, man?
Cody, I'm doing well, man. Thanks for having me. Appreciate it.
Yeah, man, of course. And how's everything with you? How's the whole COVID pandemic situation? Where
You
you
know,
at?
I'm holding in there pretty good. I think many people, I guess many of us in the crypto space, we're very fortunate. We were kind of used to the remote life to some degree, or being at our computers multiple hours staring at a screen when it came to looking at charts and what was going on in the crypto space with the constant changes in this industry. But no, I've been doing well. I'm still able to go out and do a lot of things I like to do. I like to lift and just kind of like at least get some time outdoors. But for me, I'm at my desk a lot of the time. I've been working away on my startup, doing content on my YouTube channel, and just keeping up with all that's going on in crypto, man. It's hard to leave the screen sometimes with how fast things are moving.
Dude, absolutely. And you just launched a new product called Digifox Finance. Would love to hear about that.
Yeah, man. So basically, I've been very passionate about personal finance since I actually started at the age of 13 and stuff is when I opened up like my first brokerage account, started investing in stocks. And then I got into, just understanding more of the in-depth parts of like the financial world. And over the last few years, I came to kind of realize as I was going through the cryptocurrency space and I was learning further in my personal finance journey that like, even as someone like myself who really loved personal finance, it was extremely complex, man. It's like, you
Yeah.
need like 8 to 12 different applications to manage every aspect of your finances. You need your banking app. You need like Robinhood for stock trading, Coinbase for crypto. You need your tax app, a payments app like Venmo or Cash App. Along with that as well, the core issue that I saw as well outside of the complexity of it was that like your key aspect of your bank is to be able to earn interest on your savings because they're lending it out to other people, maybe even including yourself at high interest rates. And right now, the savings deposit rate in the US on average is 0.07%. So not 7%, a fraction of a percentage is practically 0%. For most people, it's a couple pennies in their account every month. And it's really tragic to see that banks have, while at the same time paid nothing to people, but they've walked away with 24% profit margins on average in the US. So this has just been, has been challenged for a long period of time, and it's gotten worse as banks have conglomerized. And the third component that I noticed as well was when it came to payments. you know, payments are, I mean, we already talked about this in the crypto space a lot, but payments are extremely outdated. So people always talk about remittance payments and they talk about wire transfer costs, which are, a true cost. It's anywhere from around 350 to $400 billion every single year. If not in some cases worse in some other years. But in the case of another cost that doesn't get talked about is merchant fees in regards to like debit cards. So the four major card giants, we're not even talking about Stripe or Square, all these different new ones that are butting up. Visa, MasterCard, Discover, and American Express, those four card giants cost the global economy $600 billion every year just to send money from point A to point B. So these were kind of the three key issues that I'd noticed from a pretty early point in like studying finance. And, it made me feel like I needed to do something about it. So what I wanted to do was take a look at what was going on in the crypto space and decentralized finance and see about how we could pull a lot of these services into one singular application, one in which you are your own bank, you have autonomous control over your money, and you get to choose where you want to put it to work, whether you want to earn interest, whether you want to buy digital assets like cryptocurrencies, or if you want to be able to send it to family or friends. And that's basically what we built. We built Digifox. It's an all-in-one finance app. It's built for everyone. You don't have to have much experience. You can on-ramp from your traditional bank account like you could with Venmo. And along with that as well, you have a plug-in to all these different services. And we're definitely in the early stages, but we want to make it where we add more and more services as time progresses so that instead of having to KYC on 12 different applications, you can do it once. And it's like, that's the beauty of it. Your tax documents all on one singular application, all the forms generated all at once, and being able to send it off to the IRS and stuff and not have to deal with it. Like that's the kind of feature I think finance should provide. Sadly, the commercial banking industry has not worked towards providing. And you can see every single time when there's new fintech innovation, they're always 2 steps behind and just barely catching up. So I hope that at the end of the day, we can really scale out cryptocurrencies and digital wallets like Digifox out to the masses. And that's really our key goal.
Yeah. And you partnered with Celsius to do that.
Yeah, Celsius is
So,
a good company. Yeah,
yeah.
I love the team. I think you and we both know like Leah, Wasim, a lot of the people over there, and
Yeah.
even Alex, the founder. And man, they're a great team. They've built a great product, and you can start to see again, as Alex always brings up, you see a lot of different players building similar business models, kind of copycatting off of that great idea that Alex had about bringing digital assets to a larger population here, and being able to not only build the whole lending market around that, but an ability for everyday people to earn high interest rates that banks pay nowhere close to. So I think it's really fascinating in that sense.
Yeah, absolutely, man. So another question I do have for you is how did you get into crypto?
Oh man, it's it's a bit of a long story. I guess everyone kind of has their rabbit hole story where they kind of got kickstarted into learning about it. But I think for me it was back in 2011. Again, when I was starting to kind of begin that investment journey, as I discussed earlier, I was going through at the time, and I was trying to understand, about equity markets, and then eventually I started learning about central bank monetary policy. I started to get involved in kind of like the kind of, I guess, the libertarian rabbit hole where I saw like, oh my gosh, like, this is how money is created. It's controlled by central banks. This is what's led to kind of the disparity in a lot of areas of the world. And I was really fired up about it at the time, and I was looking eagerly for solutions. However, I came across at the same time, ironically enough, a video about Bitcoin. And it was the "What is Bitcoin" video on YouTube that now probably has millions of views, but at the time just had a few thousand views. And I kind of watched it, and it was this cute little animated video that basically was like, Bitcoin's this technology based on blockchain and uses miners. And to me, it was just like, I was like, dude, okay, this sounds a little too good to be true. Like, I don't even understand what this means. And I went over because I made a big mistake. Instead of reading the white paper as I should have, what I ended up doing was I looked up the price per Bitcoin because I was a trader. I was like, what are people paying for these things? There's obviously got to be a market for it. And the only pair I could find was Bitstamp on like it was like a Bitstamp price feed, and it was on a really crappy website. And at the time, it was November of 2011. It was trading at $3 per Bitcoin.
Oh,
And I always think back, it's the most ironic thing I've ever said, where I'm like, dude, who would pay $3 for some digital token? Like it didn't really click with me.
yeah.
So like probably one of the worst calls I made. Like, but at the same time, I kept up with Bitcoin over the years, kind of on the sidelines. I had seen like the rise in price to $100 and then going up to 1,100 following the Silk Road. I heard about, Magic the Gathering online exchange going down to Mount Gox. It was an interesting experience just to see it. And when I thought after Mount Gox, I was like, oh, this experiment's over. People realized it was a Ponzi or whatever. And then it eventually got back up to 1,100. And I'm thinking like, okay, I kind of negated the fact that it already pulled 1,000x and, or 300x since I talked about it last. Maybe I should look into this thing. And I finally read the white paper. And I didn't get it right away after reading it about 2 or 3 times. I started to actually get it, and it threw me back. I was like, you know what? This isn't perfect. It's not something that everyone's going to use right away, but this is something that you can use to opt out of the traditional system. It gives you an ability with the finite supply to be able to mitigate central bank monetary policy and give you something that's permissionless. It's also, again, I think the big original purpose of Bitcoin was to fix the issue of chargebacks and stuff for transactions, where people would, for example, buy something from a merchant and then they would do chargebacks. It's a very big expense, and it's a reason why like Visa and MasterCard charge some of the fees they do. But yeah, no, it basically, to me, it just sounded like a fascinating technology. And as in 2016, when I like started getting involved in it, and as going into 2017, where I bought my first Bitcoin and stuff, I really just kept eating this stuff up. And what was funny at the time was I just left university basically after May of 2019, or sorry, excuse me, not May of 2019, May of 2017. I'd finished up my freshman year at university, and I basically went off to study through a program called Praxis, which is basically an alternative education program that after 3 months of online education, you go and work at a startup somewhere. So I was working on, what we had to develop was these personal development projects, or PDPs. And one of them for me was, because I wanted to pursue a career in data analytics, I basically was going to make a YouTube channel on data analysis, hence the name for the YouTube channel, Data Dash. Yeah. So it was actually not meant to be anything related to crypto. But I was going to do if you go back, if you look at the first videos I posted, or some of the first videos I posted, it was a video series of basically going through the language of SQL or SQL and how to manage data and make it visual and actually pull something from it and learn from it. And for me, it was like, that was it. I was so gung ho, and I was like, this is going to be my career focus. But I knew that this channel I was making was for employers. And I thought, you know what, I have to showcase I'm really passionate about this stuff. I'm not just, putting this up there. So I did 2 videos talking about like the current status of crypto markets. It was like a 20-25 minute video. No one was subscribed to me, and I was just rambling on about what was going on in crypto. And I noticed, I think it was on like the first or second video, that one of them got like 100 views in like probably a day or two. And I thought to myself, I'm like, dude, I've used YouTube since 2007. I've never had a channel just get those kind of views without like a subscriber basis that you have to build up. And it takes usually weeks to do that. So I was like, okay, I've got to keep making content. So I kept doing it. For me, it wasn't a job whatsoever. It was really fun. And there was just constantly all these new things going on. So I would research in the morning, produce a video. I do a second video in the afternoon, usually doing 2 videos a day in total. And basically towards the turn of the fall and the winter, as we went into the peak of the bull market in 2017, we had grown up to an audience size of, I think, around like the upper 200,000 or like lower 300,000 range of subscribers. And it was just, it was incredible, man. I've never had any channel I've used. Like I said, I've been at it many times on YouTube trying to create channels. And that was the first one that really grew. And I'm happy that it evolved and it was this, because I'll be honest, man, I don't think, there's a lot of great categories on YouTube you could do content for, like gaming, you could do vlogging and stuff. I don't think I'd be passionate about that. This is a real technology that can leave an impact in people's lives. So I'm very passionate about that. And I'm happy to even have an ability to share my thoughts to some people in this space.
Yeah, that's awesome, man. And we definitely all appreciate it. So another question. What do you think is a good source or go-to for a trader just coming into crypto? Like what books or anything did you read?
That's a good question. I learned actually, a lot of people ask me about books and stuff. There are a few good books out there that will teach you about kind of like trading or just generally about investing in markets. I would say if you're going to read books about like trading or investing, to stick mostly to long-term investing. In regards to trading, if you really want to do more short-term or kind of swing trades, like I do more swing trades over monthly time frames, over a longer period of time. I would say to watch a variety of different YouTubers. We have, for example, a trading tip series. Sorry, shameless plug, but we have a free trade. We have a free trade. We have a free trading tip series that like I basically made and stuff just to share with people how to use different indicators. And it's nice thing about it is it's still relevant and stuff. Like this was back in 2017, but it still works. You can use a lot of those tips and stuff to get a good basis on using indicators. But the thing that I would say that is important to focus on, no matter where you turn to these resources in regards to trading, the best thing is to focus on a few key lessons that I would probably share. To always trade on longer term timeframes. So I always recommend to people avoid day trading. The second thing as well is there's so much volatility in the space for potential profit, where using things like margin usually isn't really necessary. That's a big trend in crypto now. I don't trade on margin. The only time I've ever done it is I tried a DeFi platform that allowed me to actually basically in a decentralized way trade on margin. But yeah, that's the only time I've ever done it and stuff. It's not really an interest of mine. And outside of that, outside of doing long-term timeframes and not trading on margin, instead of using a whole basket of indicators, there's never going to be one that absolutely works for an end user. The best thing to utilize is support and resistance. It's commonly what's referred to as naked trading. Now, of course, I know everyone would like to see us naked on screen right now, but luckily you don't have to be naked to do naked trading and stuff. Maybe during COVID and stuff, you could be naked. As
I
long
packed
as
on some pandemic pounds, so I don't know
yeah.
about that.
But yeah, man, it's like that's the cool thing about naked trading. It's so simple. It's basically just looking at ranges where price usually tops out or where it finds support. And when you look at those longer term time frames and you employ those simple mechanisms and you don't get caught in doing any kind of excessive trades on margin or leverage, you set yourself up for a much higher rate of success because you're not stressing as much. You're not going in and out of the market. You're not getting that kind of gambling rush that you get day trading. And though for some people in that case, that's why it's kind of a turnoff. In the end, if you want to make money, that's how you got to do it. So you have to focus on those longer term time frames. Focus on, in the case of crypto, the way I would view it is that Bitcoin has gone through multiple cycles. I like to generally find those 80% corrections. And as we ride up to the new highs, wherever that may be, I like to think about, where do I want to be positioned in? What plays are doing something innovative? What assets out there? This is going to be a difficult question, but what assets are going to outpace Bitcoin over the next couple of years? And you really have to do some due diligence. You have to have some diversity. And then also you want to probably have, again, even though I can't give people direct financial advice, if you do believe Bitcoin's going to go up and stuff, it's good to have some diversified exposure into a broad asset class of different assets, just to have that exposure. But I'm curious, what about you? Are you kind of more like, are you solely on Bitcoin right now, or do you have like a kind of basket between different assets? Or I'm curious.
I'm solely on Bitcoin right now. Outside of Bitcoin, traditional assets, I have some real estate as well. but that's
Yeah.
really it. Nothing too crazy. I try to
Yeah.
keep my life as simple as possible.
Hey man, it's good, dude. And that's the
Yeah.
thing. You gotta have different exposure to different asset classes, and I think that even goes not just for crypto diversity, but again, as you mentioned, like for me, I have now positions. I've worked as we had a dip and stuff in the market. I did pick up some equities. Um, I've looked. I do have a little bit of physical, like gold and silver, not much at all, but I'm looking to get some exposure there as well. And then hopefully, if you know, I was hoping for more of a dip in the property market, but I guess I don't know if we're going to be getting that. You know, maybe in certain areas, but yeah, I guess that properties can be a good thing to look at as well. But yeah, I don't know. I guess it depends on what someone's interest is. You know, on either making rapid growth or just kind of keeping things simple, as you mentioned.
Yeah, absolutely, man. So my next question for you is, do you think Bitcoin is a good hedge against hyperinflation of the US dollar?
Yeah, I think it's a good question. So there's a good precursor for this conversation. Goldman Sachs, as you probably remember, Cody, like they came out back a couple of weeks ago.
Yeah.
Yeah, they came out with a report, if we want to call it that.
Not an asset.
Yeah, no. Yeah, they basically completely, supposedly dismantled Bitcoin as an asset, and they laid out pretty much in a PowerPoint slide why they came to that conclusion. And they said one of their key points was that Bitcoin was not a hedge against inflation. And again, just to make sure for clear transparency's sake, for those who don't know about inflation, inflation is the depreciation of a purchasing power in a currency, or it can be also referred to the excessive printing of a currency. So if you had $1 billion of US dollars one day, and then the central bank creates another billion, so you have a total of 2 billion, your dollar is going to buy half as much, generally speaking. But this is the problem that I see, right? So we had a decade of central banks printing money over the last 10 years, actually more than the last 10 years, over the last 12 years, since QE really started, or quantitative easing, where central banks bought up assets that were toxic assets or US treasuries and injected a lot of capital into the economy. Equities rallied solely off of this. If we would have never had quantitative easing, we wouldn't have had the rally in equities we had. Same goes in regards to the property market, and the same goes to assets like cryptocurrencies. This is a very big issue that I have with people, on both sides and stuff. People will say that Bitcoin is the only hedge, and in some cases, there's the other side that say people say Bitcoin isn't a hedge, and I'd say neither of those are correct. Bitcoin, stocks, assets as a whole are all hedges to different degrees. The problem about equities, on the other hand, is that they're a much larger market. And the second thing is that they're directly correlated to real world things. They are tied to corporate earnings. They are tied to a degree about the performance of certain things going on in the world of geopolitics. If the U.S. enters into war with another country, stocks are going to plunge. The safety of that ownership in those companies is going to be different. So there's a lot more correlation to real world aspects. Whereas Bitcoin, similar to gold or silver, is a kind of asymmetric, non-correlated asset. That's a very fancy term for it's not really tied to the U.S. economy or tied to how a government reacts to certain things, nor is it tied to a central bank's monetary policy. It's completely immune from that system. So what you have is this opportunity here where Bitcoin, really with a finite supply at 21 million coins, not being tied to anything and being something that cannot be shut down, that to me sounds like a pretty good hedge, if I'm thinking about it. And that's yeah. And you can see as I was mentioning at that point, about like gold and silver, you have, for example, gold and silver and stuff that have persisted for thousands of years because they have the properties of good money. They have a limited increase in supply due to the fact that you have to mine it and refine it into actual precious metals. But yeah, I mean, that's the key thing. In my book, I think Bitcoin kind of serves as that ultimate hedge. And I think especially for our age group, kind of millennials, Generation Z, people kind of get it, like they just kind of want things in a digital format and something that gives them autonomy from a system that they've kind of either they might trust, to use it on a day-to-day basis, but they don't really have a good feeling about the banking industry as a whole. So I think that it'll become more and more popular as it's more and more easy to get access to. And then the price appreciation is also a very nice benefit of Bitcoin. And that's how and being a new asset, that's how it's been the best hedge over the last decade. If you talk about pure performance, it's been the best performer against the dollar out of any mainstream asset, compared to stocks, properties, gold, government bonds, whatever it may be.
Yeah, absolutely, man. And I just also want to thank you for coming on. You're a huge wealth of knowledge, especially to my audience and everyone else in crypto. So thanks again. And where can people find you?
Yeah, so I guess there's two different places people can find me. Not only on my YouTube channel, Data Dash, where I do a lot of free content and stuff. I cover the markets 4 or 5 times a week. You can also follow me on Twitter at Nicholas_Merten. But also, if they're interested as well, if you guys are just getting your feet wet in crypto, you can definitely take a look at Digifox and stuff. We're trying to build an app that hopefully not only provides us a crypto exchange, but has all kinds of different services for people getting into finance. But yeah, man, honestly, seriously, it's been a pleasure, Cody. It's awesome just getting to
Yeah, man.
catch up with you, man, and especially during this time where we're all in different places. And yeah, man,
Yeah. Thanks again, man, and have a good day.
thank you as well, Cody.